I'm Owen Bigland. This is the Inside Edge video blog. Okay, this is going to be an interesting blog, and it's going to be a really important blog. I want everyone to watch this. I'm going to put a link here to a PBS documentary that was done back in 2016 on saving for retirement, called The Retirement Gamble. I talked about this back when it came out in 2016, but it's time to revisit it. I want everyone to watch this. I want you to hit the link to this PBS documentary and save this blog, because this is an important one. If you've been a watcher of my blog here for the last 10 years, there's a couple things that I pounded home here over the last decade. Two things, the main two things is buy your principal residence sooner rather than later, especially once you're able to commit. If you're going to live in Vancouver for at least 8 to 10 years, then you should be owning your principal residence as opposed to renting, and then just hang on to the damn thing and you'll never look back. It's a fairly simple formula, but it's going to take some work, especially in Vancouver. You're going to have to save the 15 or 20% down payment, and then you're going to have to get qualified for the mortgage, which isn't easy. But once you're in, you have crossed a huge, massive financial hurdle in life. And I've done, 30 or 40 blogs on it. The other thing that I pounded home to is people taking control, you taking control of your financial wherewithal, where you are financially, saving for retirement, maxing out your TFSA and RRSP. And I've always suggested that you have to learn this stuff on your own. Whether you're going to use a money manager or not, at least learn the basics of this before you decide to put your money in the hands of a financial planner or a stockbroker or someone at your local bank or credit union. This is absolutely critical, as the link I'm going to post here from a PBS documentary. So, I've talked about this many times. You can't be spoon-fed this basic financial knowledge, and that's all you need. What I tell people many times is you have to spend or commit 100 hours. I know to some people it might sound like a lot, 100 hours. It'll go by quick. You spend 2-3 hours a week on this, within a year you'll have the basics that you have to have. Again, people will often ask me about stocks or RRSPs or TFSAs, and I do not get back and forth on giving you recommendations or some of the things that I'm buying. I'll post it on my Twitter feed, but what's right for me isn't right for you. And I get people all the time that will ask me some basics about investing or taxes. I can't spoon feed this stuff to you. You have to learn the basics on your own. And, we're talking hundreds of thousands of dollars here that you're going to be leaving on the table if you don't spend at least that 100 hours learning the basics. So let's start from the beginning here. We can almost call it, I'm going to loop around here a little bit. It might get a little bit unwielding, but there's always people that'll say, the system is rigged against me. The banks and the realtors and the government and everything else. Well, in a way, the system in many ways is rigged against people. I've talked about it many times how, governments, for instance, do everything they can to prevent you from taking out some leverage at 2% on a mortgage, on an appreciating asset, but, do nothing to curb the outlandish credit card charges of 20 and 25 and 30%, which is all mixed up. The other thing, of course, is I've talked about how basic financial literacy should be taught starting in grade school and run all the way through high school, but it's not. And we're just talking the basics about how compound interest works, how the stock market works, how buying equities and how dividends are paid, payout ratios, the eighth wonder of the world known as compounding, how that works, how mortgages and leverage work, and of course how taxes work, how your TFSA, your RRSP, your working income is taxed, and the basic ways you can defer taxes as a working individual in Canada. These are all such easy stuff to learn. Again, 100 hours and you will have the working knowledge you need. You don't need to be an expert. As I talk about it in my book, which I'm going to get to in a minute, I talk about this at length in my book in multiple different chapters, how it's almost like being a mixed martial artist. You don't have to be an expert in everything, but you need a good working knowledge of a lot of different disciplines. Compounding, taxes, leverage, mortgages, how to save, RRSPs. Once you have the basics, now you're equipped to move through life, retire, save for retirement, and then you can make the decision as well of whether you want to take this on yourself, which is what you should do, as I'm going to get to in a minute, or you want to pay someone to handle your retirement savings for you, which I'm going to talk in about a minute, and I'm going to post you a link to this PBS documentary. If you want to do that, go ahead, but you are probably going to be leaving half of what you're going to be able to retire on your own on the table with commissions and high fees and what we call churning your portfolio. But this stuff should be taught in school, and it's not. So the system in a lot of ways is rigged against you, because the financial industry, as I talk about chapter 7 in my book, how the stock market works, and some of the kind of dirty little secrets that, they don't want you to know, is, they will make you believe, the financial industry, that investing yourself, taking care of your own financial wherewithal, saving for retirement, investing, it's way, way too complicated for you to take on yourself. You need to hire us, pay us, and we'll do it all for you. And that is a complete myth. It's a lie, as I point out in my book. This PBS documentary, I think, is going to be a real eye-opener for people too. Don't buy into it. Instead, learn the basics, spend 100 hours, it's not too much to ask, and then I suggest you just index invest, and you can go through, you open up an online brokerage account at TD or Royal Bank or Scotia Bank. You can go to a website like Canadian Couch Potato, which I've recommended many times on this blog as well as in my book, and just build some of their model portfolios, ETF portfolios that are going to pay, you're going to pay anywhere from 6 to maybe 20 basis points. 20 basis points is 1/5 of 1%. You compare that to putting your money with a money manager or managed mutual funds, you can be paying anywhere from 100 to 300 basis points. So it starts there. One of the things, I'm going to post a link here, is to a documentary that PBS did in 2016. And I did a blog back in 2016. I did several blogs talking about this documentary, but it's time to revisit it because I saw that it was picked up in some news channels recently, and I saw some stuff on Wall Street Journal on this. It's a fantastic documentary. It's an hour long on essentially how people are getting ripped off, blatantly ripped off by investing their money with money managers or in managed mutual funds that are charging you 1% under management and then putting you into these managed mutual funds, which are underperforming the index, and then charging you 150 basis points for the privilege of underperforming the index. Now, I don't want to throw all financial planners under the bus. There are plenty of good ones. However, what I do suggest is what PBS and what my friends in New York who are in the money management business on Wall Street always taught me to do as well. Spend 100 hours learning the basics yourself. Learn about how ETFs and index investing work, and learn the difference between what a low-fee, self-managed ETF portfolio or buying your own individual stocks, dividend-paying stocks, paying no commission virtually, and no management fees, versus what it's going to cost you over the long term of going with a money manager charging you 1 or 1.5%. Then you can decide. And I think that's the way to go. The other thing I tell people, I mentioned in my book, if you are going to use a professional money manager, you should, in my opinion, go with what's called a fiduciary money manager. So this is this type of planner would be a fee-based planner. In other words, they're like an accountant or a lawyer. You would set up a discount brokerage, online brokerage account. They would consult you on what to buy, what ETFs to put in there, and then meet with you once a year. They'll charge you a flat hourly rate to construct your portfolio. You will manage it yourself. And that is probably the way, that is definitely the way to go. They are a fiduciary, so that means that they have to act in your best interest. They're not working off commissions. Again, this is stuff that you guys should all read up on. The difference between doing it yourself, or if you don't want to do it yourself, at least hiring a fiduciary planner that gets paid by the hour to set up the portfolio, and then you run it through TD Waterhouse or Royal Direct on your own without paying the management fees. The only commissions you're going to pay are the small management expense ratios you're going to have on the ETFs. So if it's Vanguard or iShares, they're minimal, 8, 10, 15 basis points. And you're not paying these ridiculous fees for managed mutual funds, which can be 150 basis points. So this PBS Frontline called the Retirement Gamble. I'm going to post the link, have a look at it, watch the whole thing, but if you really are short on time, start it at about the 22-minute mark. That's where it really starts to get interesting. That's where they start to break down what the fees are doing compared to doing it on your own. And here's a stat that you are not going to believe, but it's true, and even the reporter didn't believe it. I knew about this. I saw this documentary a long time ago, and my guys on Wall Street were educating me on this 20 years ago, thankfully. If you have a portfolio that's earning you 7% annualized rate of return, and that's easily done. I mean, you might get a 3 or 4% dividend yield and then earn another 3% capital gain. So let's, for argument's sake, let's just say it's 7%. If you have that with a 2% fee attached to it, so you've got management expense ratios, and then your financial planner is charging you 1% flat rate for whatever you've got under management. So in other words, if you've got $1 million portfolio, they charge you $10,000 right off the top. And that's what most financial planners, stockbrokers that are managing, they always have about a 1.5% fee. If you've got over 5 million, maybe they take that down to 0.5%. It depends. Again, 7% return with a 2% fee. By the time you retire at 65 or 70, 2/3 of your portfolio would have gone to the money manager. So in other words, if you would have created $1 million portfolio doing it on your own, 7% at a 2% fee, you'll end up with 300,000, just over 330 some odd thousand by taking out a 2% fee. I know the math does not sound right. You're losing 2/3 on a 2% fee. It is. The reporter didn't believe it either. Do the math. This is the eighth wonder of the world called compounding. Compounding will work in your favor, but it can also work against you if you're getting these ridiculous fees taken off the top. So have a look at this documentary, but this is one of the most critical things. Two things if you take away from me: buying your principal residence and holding assets for the long term. Get out of the renter treadmill. And the second thing is you have to learn the basics of handling your own money, saving for retirement and investing. You've got to get your money working for you. But the way to do it is to just learn the basics, learn how taxes work, learn how compounding works. There is so many resources now. You can start with my book, and then I've got all the resources in there. Canadian Couch Potato, I keep telling people, sending people back to that. In there, they have model portfolios, low-cost ETF portfolios that will do everything that 90% of you guys need. 90%. And then if you want to take it to the next step, hey, you could start buying some individual stocks and collecting the dividends and just reinvesting it and letting compound do its thing. But you have to be very careful these days with having people be very cognizant of aware of the fees you are paying. I had a guy about a year ago, a realtor, asked me to take a look at his portfolio, and he just wanted me to have a quick look at it. And as expected, he had these high fee managed mutual funds. He also had a money manager that was charging him 1% for assets under management. So that was about another $15,000 straight off the top. And all that for a portfolio that is underperforming the index, the S&P 500, the QQQ NASDAQ. That's the crazy thing with this stuff, as they'll point out in the Frontline documentary, PBS. And I've talked about it many times before. These managed mutual funds and stockbrokers that are trading in and out of stock and churning your portfolio and charging you the commissions, 85% of them can't beat the index every year. 85%. Of the 15% that do, they get lucky one year, but it's very difficult to repeat that year after year after year. So don't play that game. Just put your money in the S&P 500, the QQQ, the TSX 60, and call it a day. And stop paying these ridiculous fees that are going to take 40, 50, 60% of your retirement funds away from you by the time you're 65 or 70. The numbers don't lie, and they're just shocking. So have a look at it. Financial literacy, it really should be taught in school. As I say, it's crazy that it's not, but this is, one of the reasons, in a lot of ways, they want to keep you poor. And you've got to break out of that. You've got to learn this stuff on your own. It can't be spoon-fed. You got to learn the basics, and then you'll be able to navigate the ship. And again, if you don't want to do it yourself, then you can hire someone. But I would recommend interview a few for the job, and I would go with a fiduciary, someone who's going to charge you an hourly fee to manage your portfolio. Once it's set up, it's on autopilot, and you've got it through a discount brokerage like a TD Waterhouse or an RBC Direct. I'm Owen Bigland. As always, thanks for watching. I'll see you next time.